Mic check, 1, 2, mic check. Can I get a 1 in the chat if I can be heard? Let me just sort this out. Salute to everybody in the chat. Salute Celia. Salute Veno. Good to see you guys again. We're back again for another salute them. Back again for another Sunday focused on investing session where, you know, we take a technical analysis, look at the charts. Going to look at what the markets are saying, both UK and US markets. Going to look at some stocks, possibly some commodities if you guys want to look at some commodities, possibly some Forex if you guys want to get into some Forex, you know, whatever you guys want to get into, you know. Yeah, well, thank you for joining me again for another session. As I said, every Sunday we do our focus on investing sessions. You know, it's 8 p.m. here, UK. I think it's, what time is it? US, it's 3 p.m. Eastern and 12 Pacific. Is that correct? I know last time we had a bit of confusion as to what the times were, but whatever time it is now is the time that we're going to be doing each and every Sunday. All right, so what we're going to be doing to start off, first thing we're going to be doing is basically just having an overall look at the markets first, just to see, you know, where we're at. Veno says, I have a few penny stocks that I would like you to look into when you get time. No problem. We'll do that. So what we'll do further said, first thing we'll do is we'll look into the markets just to see like where we're at. You know, we had a bit of a rough start to the markets the beginning of the year. You know, the beginning of the year dip, and then we had the so-called, you know, quote unquote conflict between, you know, Russia and Ukraine that supposedly tanked the markets. And, you know, the overall sentiment has been that, you know, the markets are down at the moment. But, you know, just because the markets are down doesn't mean there's not opportunities for us to make money in the markets. And markets aren't necessarily down. So first thing we're going to do is, you know, set the week off right. You know, beginning of the week, look into the following week, look at where we're at in the markets. And then after that, we can get into some of you guys' questions. I know Celia had a question, and then Veno has a question as well. So, you know, any questions you have about the markets, anything about trading, Forex, commodities, anything you want to know, anything you want me to look into, any particular stock, any particular, whatever it is, we can kind of get through and take a look into. All right. So without further ado, let me just get myself set up to bring up the market screen. So first thing we're going to do is take a look at the markets. Let me get my... So we're going to start with indices. The indices give us an overview of exactly, you know, where we're at in terms of the overall market. So let me ask the chat a question. Do we or do we not invest in the indices? When I say the indices, I mean, you know, the Dow Jones, the NASDAQ, and things like that. Let's see what the chat says. Do we or do we not invest in the indices? Let me see what your guys' thoughts are. Anybody have any ideas? Anybody want to hazard a guess? You want to guess, do we invest in indices? Okay, Celia says no. What say the rest of the chat? Do we or do we not invest in the indices? Anybody else have any guesses? Oh, so Celia, so Celia said yes and no. So the answer is no, we don't invest in the indices. And the reason why is because the indices are essentially a collection of stocks, right? So if we take the let's go to Lem Hendricks said unsure. So the answer is no. So if we go to let's go to the S&P 500. The whole reason why it's called the S&P 500 is because it's a collection of 500 different stocks. Let me actually bring it up for you. Bring up the definition, exact definition for the S&P 500 for you guys. All right. So this will give you an understand why we do not invest in the indices directly. So Celia says, are they used as a guide to determine the health of the markets? That's correct. That is correct. But let me switch my screen share. Hold on. Let me so I'll give you the exact definition of the S&P 500 and what it is. Getting used to this streaming thing. So here we go. So when it pulls up, all right. So this is Investopedia. So Investopedia says, what is the S&P 500 index? The S&P 500 index, or Standard & Poor's 500 index, is a market capitalization weighted index of 500 leading publicly traded companies in the US. It's not an exact list of the top 500 US companies by market cap because there are other criteria that the index includes. Still, the S&P 500 index is regarded as one of the biggest gauges of prominent American equities performance and by extension that of the overall stock market, right? So the S&P or Standard & Poor's 500 index is a market capitalization weighted. So it's not the top, but it's got a certain weighting to what the actual index is. So it's basically, as you said, Celia, it's a overall guide as to what the overall market is. And obviously, we're just talking about the S&P 500 here. But having said that, all indexes or indices are made up of collections of stocks. And because it's an amalgamation of all of those, it kind of gives us an idea of what the overall health of the market is. So now that we understand what the index is, let me see now if you guys can guess as to why we do not invest in indexes directly. Let me see if you guys can work out what does chat think. Why do we not invest directly into the indexes? What say the chat? Why do you think that it's not a good idea to invest directly into the indexes? You can see indexes. Celia says she don't know. Anybody have a guess from what I've just said on the definition of what the S&P 500 index is as to why we don't invest directly in? We don't know. All right, then I'm going to tell you. So the reason why we don't do it is because it's an amalgamation or average, right? So essentially, it's taking, if you know the difference between, Vino says he's not sure. It's like, I don't know if you know the difference between like net and gross, right? So it's almost like what the index is doing, it's taking all the good performing stocks and then minusing all the bad performing stocks, right? Because it's an average, right? So if the market is somewhere in the middle, that means there's probably some that is up and some that is down, right? So the market is averaging out, the different stocks, right? So if the market is up, that means that there are some strong performing stocks amongst those 500, right? This is why the market is performing up. However, what it's doing is taking those strong performing assets and also minusing the bad performing assets, right? So if you're investing in the S&P 500 directly, even though the market is up, you're not really getting the full potential of the market simply because there are assets that are outperforming the market, but you're not getting the full exposure to those because you're also including the badly performing assets in the market. Does that make sense? Right? So we have a thing called what we call opportunity cost or cost of opportunity. And essentially, what an opportunity cost is, it's it's where can your money be most effective, right? So if you have a opportunity A and you have opportunity B, and opportunity A is offering you, let's say, $100 return, and opportunity B is offering you $50 return. If you went into opportunity B, the cost of opportunity for opportunity B will be $50 or 50%. Why? Because that money that you took to invest into opportunity B could have been, you could have made 50% more or $50 more in opportunity A. So the cost of being in opportunity B, which is the $50 of opportunity, cost you $50 because you could have made an extra $50 in opportunity A, right? So if you invest directly to the S&P 500, then there's going to be an opportunity cost, right? The opportunity cost would be the cost of opportunity to whatever the best performing stock is on the S&P 500 index, right? So this is why we don't invest directly into the indexes, because there are bigger and better opportunities to be found amongst the stocks within the market, rather than the actual index itself, correct? But the reason why I bring that up is because this also offers another interesting fact, right? The interesting fact is, because the markets are an amalgamation or an average, that also means that if the market is down, the market can be down and there can still be bullish stocks or good performing stocks, right? So you can have a bear market with bullish stocks within a bear market. Do you understand that? Right? So, and the opposite is also true. You could also have a bull market with bearish stocks within them, right? So this is also important to understand, especially, at this time, the markets are actually showing to be bearish. However, there are some great performing stocks within the markets, and it's a great time for you now to get involved in, the stocks as we're just coming to the beginning of the run. If you understand anything about markets, they ebb and flow almost like tides of the ocean, right? The ocean never comes in completely all in one go, right? The oceans, they ebb in a bit, pull back a bit, ebb in a bit further, pull back a bit, in a bit further. And you'll notice that with any sort of market, right? Any sort of market will go forward, it will take a bit of a rest and then come forward again. So the most times you generally see markets go on a run, or you see any kind of strong movement, is directly after a pullback or after a consolidation. And as we know, the beginning of this year, has been quite tough on the markets, right? We've had a lot of stagnation and a lot of pullback. So now what we're seeing is we're witnessing the markets just breaking out of that consolidation or that pullback, and the markets are just ready to go on a run. Okay, so let's go back to our charts. Let me go. And we're going to take a look at exactly what the markets are doing this week. All right, so let's go back to our first chart. Obviously, this is our 4-screen focus on investing setup. If you guys can see it loading up. We also have our focus on investing custom coded indicators on our screens to help us understand the markets a bit better. There we go. I think we're loaded up now. All right. So the first thing we're going to do is said you look at the US dollar index futures, ticker symbol DX1 apostrophe. All right. So if we look at the monthly view to get an overall look at where we're at currently within the markets, we can see that, you know, since April 2020, we can see that the markets were around this level. Let me draw it in here. We can see this is, you know, April 2020. This is the bug sort of times. You know, since then, we've seen the market actually decline strongly. We can see the market has declined quite strongly since that time till we reached our most recent low on this market. We can see we had a double bottom here. We bounced off the support level of 89. We bounced off it in December. We actually saw a little recovery at the beginning of the year, and then we saw again a pullback from the beginning of the year. We saw a bounce on May and also June. This is 2021. But since that time, we've seen nothing but strong growth from the US dollar index futures. And we can even, if we zoom in, we can take a look at, you know, our most recent bar, our most recent candlestick, and we can see a strong green candlestick showing great growth within the market. So, you know, the market is growing strongly at the moment. If we take a closer look at the daily time frame, one second. All right, let's look at the daily time frame. We can see that, you know, the trend is actually very green at the moment. We're seeing a lot of bullish action with price. We're seeing a good, strong movement to the upside. We can see that the trend filter is green. We could also see price traveling trading above the 20 simple moving average, the 20 simple moving average trading above the 50 simple moving average, and the 50 simple moving average trading above the 200 simple moving average. Remember, these lines represents the average value of the stock, right? So if the stock is trading above the moving averages, that means that the stock has a bullish bias. And if the stock is trading below the moving average, that means it has a bearish bias, right? So it's basically giving you a guide or of a representation of what the average value of the stock is, right? So this is how you can tell whether or not the stock is trading above average or below average, right? I see you guys' questions in the chat. I'll address them after we kind of have a look at the markets, and then I'll answer your questions. All right. So we just kind of get an idea of where we are positioning wise in the market. So today is the 24th. So what was last Sunday? Let's see what the market has done since last Sunday. Last Sunday was the 17th. All right. So let's go find the 17th of April. So we were. So we can't get the 17th, so we'll get the 18th because the market doesn't trade on the weekends. So you can see since that time, you know, the market has grown up, it's pulled back a bit, but then it's actually gone to a new all-time high, right? So we can see that price is actually trading at an all-time high, or not an all-time high, but a most recent high for this market. So we can see that even though, you know, the overall markets might be perceived to be down, we can actually see that the market is actually growing. So there is actually growing stocks on this index, right? So, you know, this is showing you that as these markets and indices grow, there are actually stocks within them that are also growing as well. So, for the US dollar index for this week, we could see, we had a bit of growth, we had a bit of a pullback in the market. It never actually came all the way back down to reach our 20 simple moving average. And then we actually saw a new high. So that's showing you that there are opportunities in the US dollar index futures. Let's go to our next indices. And we're going to go to the UK markets now to look at some UK indices to see what the UK stocks are doing. What was interesting about the UK market is we can see that, if we draw our high levels in here, we can see that, even though the markets were down since, 20th January 2020, sorry, the bug times, we can see that prices completely recovered from that time. And we've actually come right back to our all-time high. So this market, the UK markets are no longer down. Right, the new UK markets are back at back to its all-time highs. If we zoom out, we can see that this market is trading at all-time highs. The market is slightly shy of it. You can see where we had our wick or our wick of the candlestick just came just slightly shy of our all-time high level of 7751. So it shows you that there are opportunities within the UK markets as it's looking very healthy. If we look at the daily time frame, let's go and check the daily time frame. If we look at the trend filter, we can see that the trend filter is colored green. It's been green since the 21st of March. So we can see a lot of growth within this market. We can actually see price trading above the 20 simple moving average, 20 simple moving average trading above the 50 simple moving average, and the 50 simple moving average trading above the 20 simple moving average. We can see that we actually had quite a long green bar here that was started below the 20 simple moving average. But you can see that trend filter is still green, so we're still above it. We can also see that we're trading just slightly below our key resistance level here at the 7692. But again, this is showing good growth and recovery in these markets. If we go back to the 18th, which was last Sunday, let me go to the 19th. We can see that, the markets has dipped slightly. The previous week, we can see that from the 8th and the 11th of April, we had our highest point since the dip of the beginning of the year. But then we've actually seen a pullback in the market, a slight recovery, and then a bit of a dip. But know that I expect the market to continue to rise again, to come back to our all-time high level, which is here again at our resistance level. All right, so that's the UK 100 index. Let's take a look at the S&P 500, what we spoke about earlier. If we go to the S&P 500, we can see, like as with most of these US indices, we can see that, the beginning of the year was quite tough for them. We can see that, the price was very bullish until we got to the beginning of January, and then we saw almost like a market correction. It's like the market has established itself at a new high. The new high is here. If we draw our line, we can see it's the new high is around the 4525 level, right? So we're seeing the markets, find a new high level. It's kind of absorbed all of this, beginning of the year, the economy being down, this whole conflict between Russia and Ukraine, and it's kind of settled on itself being at its own kind of level, taking all of these things into consideration. If we go closer onto the daily time frame, before I reset the chart, we can see that the trend filters on a lot of the US markets are actually red, right? So the opportunities in the US market is actually down. We can actually see two strong red bars or red candlesticks. So we can see since the 21st and the 22nd of April, we can see that the markets have tanked quite a bit. If we look at our moving averages, we can actually see that, they're not ordered in the correct order that we'd like to see. Ideally, we'd like to see the 20 simple moving average at the top, the 50 simple moving average in the middle, and the 200 simple moving average at the bottom. Instead, we can see the 200 simple moving average at the top, 20 simple moving average in the middle, and a 50 simple moving average at the bottom. And then we have price trading below that. So what it basically is telling you is that the S&P 500 index is actually trading below average. It's trading below all of its averages, the 20 simple moving average, the 50 simple moving average, and the 200 simple moving average. So, right now, anything on the S&P 500 index, you'd have to be a bit wary, as the overall trend of this market is actually bullish. Sorry, it's actually bearish. And we can still see that we have our death cross here with the 50 simple moving average trading below the 200 simple moving average. So this is still a bearish market, right? But remember, just because it's in a bear market, it doesn't mean that there are not bullish opportunities, right? If we look at this time period between the 15th of March 2022, and you could say maybe the 29th of March, we saw how many days? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. So 11 days of straight bullish growth. So there was opportunities here for you to get bullish growth within the market, even though we're in a bear market, right? So again, this is why I always stress that these are indices, which are averages. So just because the overall trend of a market might be in a certain direction, it doesn't mean that there are not opportunities within that market in order to find growth, right? But as it stands, the S&P 500 has had, 2 strong bullish days, which has corrected itself back at this level here. This is the support level that it seems to want to find itself as. We can see that it came all the way down to this. It acted as a level of resistance here. We had a double bottom, a pullback, and a bottom again, and it pulled back to this kind of support and resistance line. We can also see here in this same sort of area, price came down to this level again. So this market seems to have something around this, 4271 area, 4266 area. If we zoom out a bit more, we can see a strong level of support for this market. If we look here in October 2021, we can see that the market found a level of support at this area as well. If we go back down to 20th of July 2021, we can see that the market found a level of support at this area as well. So we can see that this number or this price level is something significant to do with the S&P 500, right? So because we can see that this is a strong support level, it's more likely than not that price will hold at this level and then maybe bounce and continue back up to the upside for more growth in this market, right? However, we do have a slightly lower support level here, just slightly lower. So price possibly could fall back to this level and bounce again before we get continued growth into the upside of this market, right? So let's take a look at our next market, which is the DJI or the Dow Jones. If we look at what stocks are, again, an overall look at the markets on the monthly time frame, similar story to most of what the US markets have done. Been very bullish with a lot of growth. And then we can see from, January, we saw a recorrection of the market. This market has sort of found a sort of recorrection level here at the 34649 level. So this is where it's actually established its new normal, if you want to use that term, for this market. So this is kind of going to be our new high. If we refresh the market, we can see a similar story in this US market as well. We had a lot of bearish momentum from the beginning of the year, 5th of January 2022. We can see market fell all the way down, found a support level around here, which is the 32877 area. Price bounced and then kind of, found a resting place somewhere between our high level where the market has found its all-time high, which is of 36934, and this low level here, which is 32877. We're somewhere in the middle with our kind of resistance level. So we've seen price kind of, bounce off it here once, twice. It's bounced off it here a third time, a fourth time here. It seems to be a significant level of support and resistance that's holding price. But as you can see, price has bounced off of this. And again, with the Dow Jones, we've seen a strong bearish candle. So, for the past day or two, we've seen a lot of strong bearish action in the American markets, which we haven't seen in the UK markets, right? So, this is kind of an indication that if you're kind of looking at stocks or looking for opportunities, we can look more to, UK markets this week than the US markets, because we're seeing some bearish chart patterns and some bearish declines in these markets. But again, we still have an area of, space here for price to reach before it hits this support level. But again, there's another support level here. Notice that, price here has bounced off on December 2021. Price has also bounced off here during January. It's bounced off as a level of resistance here in February 2022. We see it bounced off a few days ago on the 13th of April, and then we've seen prices just broken that support level here on the Dow Jones index, right? So if we go and take a look at NASDAQ, we can get an idea of our final market, US market, to see where we're at in terms of, the position in the markets for this week. So we can see that, again, similar story of the US markets. All the US markets are looking very similar to each other, right? Massive growth to all-time highs all the way up to January, fall back in the market, and then we can see a kind of a correction or a new high or new normal around the 14894 area. If we go to our daily time frame to get a closer look, refresh the charts. Again, similar story. We have our all-time high levels around here. We can see we was the highest around the 28th of December, and then we can see any kind of conflict between Russia and Ukraine. We can see a decline in these markets. We came all the way down to our support level. Our support level in this chart is the 13067 level. We saw price bounce off, and again we saw a good few days of bullish action with these charts before again we saw a bit of a decline, and a similar story soon in these US markets. The past 2 days have been quite strong bullish action, so quite strong bearish action, with a bit of consolidation for the past week or so, since about the 11th of April. If we highlight it on the charts, we can see that we had quite a few days of indecision as to what the market was going to do. We can see that price was in this consolidation channel where we could see a lot of parallel candlesticks and bars next to each other, showing that the market had a bit of indecision. And then we can see the past 2 days that the market has actually decided to actually tank and gone for 2 days of straight bearish action. If we take an overall look at the chart, we can see that the trend filter here is red. And we can see also that price is trading below all 3 of our moving averages. We can see the 200 simple moving average trading above the 20 simple moving average, the 20 simple moving average trading above the 50 simple moving average, and the 50 simple moving average trading above, we can see above price at the moment. We can also see that, we're not completely bearish, as we have the 20 simple moving average trading above the 50 simple moving average. For complete bearish chart, we'd have to see the 20 simple moving average trading below the 50 simple moving average, and then price trading below that. The reason why we're not seeing the 20 simple moving average trading below price is because, as I said earlier, we had this few day run of bullish momentum, right? So this is why it's important to have the 20 simple moving average on there along with the 50 simple moving average and the 200 simple moving average, right? Because the 200 simple moving average is going to react the least, and the 20 simple moving average is going to react the most. So this is going to give you an indication of most recent time frames, what the most recent chart action is doing. Whereas the 20 simple moving average sorry, the 200 simple moving average is going to give you more of an overall view of what the charts are doing. It's kind of giving you a basis of the markets rather than the most recent price action with the markets, right? So, again, as I said before, this is a lagging indicator. So this is going to tell you what happened in the past. Obviously, the 20 simple moving average is going to tell you what happened in the most recent past, whereas the 200 simple moving average is going to tell you, more of a broader overall past compared to the 20 simple moving average. So, as again, we can see that the 20 simple moving average is reflecting this most recent time frame, which is this bullish action here. But the overall market is kind of averaged out to quite flat, as we can see in this 200 simple moving average, right? So, having a quick look at all of the markets and the indices, we can see that UK markets are doing quite well, whereas the US markets haven't really recovered back this year. Having said that, we had a small bit of recovery in the past few days or, the past couple of weeks. But since then, the market has once again fallen and it's looking like it's heading towards its most recent lows. All right. So, are there any questions specifically about the indices before I go on and answer the questions in the chat? Is there any question about any of the particular indices? I've seen Lem Hendricks has asked a question about the S&P 500. So Lem Hendricks says, let me bring it up. Lem Hendricks says, would a typical 401k be S&P 500 stock investment? Do you mean what the 401k invests in as a tool? Are you talking about like as a stable investment? It said, would a typical 401k be S&P 500 stock investment? So I'm trying to understand your question. So are you saying, is that something that the 401k invests in? The S&P 500. I don't know if you want to give me a bit of clarity on the question, but if that is what the question you're asking is, I'm not too sure because 401ks are US based and I'm UK. Does it include S&P 500 stocks? I know generally whenever you're talking about more of these longer term funds, usually what they would do is they would invest in like things like government bonds and things that are a bit more stable. I think there's a bit too much volatility in these indices. Generally, what you would find is, whenever you get a lot of these kind of retirement or long-term investments, they typically go for something that is with less risk. So things like government bonds are things that are, they have a less return on them, but they're a bit more stable. So essentially, like government bonds are, a guaranteed certain amount of return, a certain amount of years in the future, right? The thing with these indices, they're a bit too much volatility for long-term investments when you're talking about things like, pensions and things along those lines. Volatility for more shorter term trading is better because obviously you want movement in the markets because the movement is where you make your money. But when you're talking about, things that are a bit more longer term, they generally go for reduced risk, right? So you've got to remember that, with more risk comes more return, right? But when you're dealing with, large amounts of money, you're talking about, you don't need that much risk. You don't need that much movement, right? So, if you're trading with a dollar, you know, 1% of a dollar is nothing, right? But if you're talking about trillions, 1% of a trillion is quite a lot, right? So what you usually find is a lot of these big institutional traders or big institutional investors, you'll find that they go for things that are a lot more stable and have a lot more stability because they only need a small amount of movement in order to make some money, right? So the risk reward is very different because they don't need as much movement because they're compensating with the movement with the amount of money or capital that they're putting up front, right? These volatile stocks are better for people who are, trading with smaller amounts, right? So the funny thing with trading is like what they call a fractal. I don't know if you know what a fractal is, but a fractal essentially is something that replicates itself on a smaller level. So they say things like snowflakes. Snowflakes are like a fractal, right? If you use a snowflake looks like a snowflake, but if you zoom into a snowflake, the patterns and shapes look the same on every level, right? They say things like mountains are the same. Like it's hard to tell if you look at mountains from above how far zoomed in you are, because the closer you zoom in, the more they look like the same thing. Like the rocks look like mountains at different levels, right? And the same thing is with the charts, right? Whenever you're talking about trading, you're talking about something that is a fractal because the more you zoom in on a chart, the more it looks the same, right? If I didn't have like this is the daily chart, right? You can tell it's the daily chart because it has the 1D up here in the information bar, right? But if I zoom out, there is no way to tell the difference between the daily chart and the weekly chart. If you didn't have that number on there, you wouldn't be able to the same if you don't know what sort of time frame you're looking at. Well, why is this important? This is important because the closer you zoom in, the more volatility you have, right? So remember, when we're looking at the monthly time frame, for the chart to have made this pattern, that you're looking at years worth of movement, right? So this can look like the chart has come up and pulled back, but this is since 2016, right? So this is very low volatility when you're looking at this level, right? At this kind of zoom of price, you're looking at very low volatility. Whereas if you're looking at the daily time frame, this is high volatility, right? This is moved all the way up, all the way down, all the way back up, and all the way back down. And this is just within a few days or within a few weeks, right? So the volatility has increased the smaller we've gone on the time frame, right? And remember, this is the daily time frame. Remember, you can go smaller into time frame. You can go down to the 1 minute, you can go to the 15, you can go to the 1 hour, right? So the reason why, the bigger investment funds don't trade at the smaller time frames is because the volatility is so huge that they don't need to take the risk on that amount of volatility with the amount of money that they're trading, right? They don't need all of that. And likewise with our sales, we don't really need to trade lower than the daily time frame because the volatility and risk is a lot higher at lower time frames, right? So what we like to do is we like to trade at the daily time frame because it's enough volatility and movement for us to make money, but it's not so much volatility that we got to add the added risk, right? So the amount of levels or the amount of money that we're trading at or the levels that we're trading at, we don't need to go that small in terms of time frames, right? So to go back to the question, you generally don't find, any sort of bigger, longer term, more stable investment funds investing at these lower levels or investing in things with this much volatility. They prefer to invest in things that are more stable, that pay returns over a longer time frame. It's just that the time frame or the increase is not as much, or the return is not as much as some of these smaller, more volatile stocks or charts, things like that. All right, let me go back to. I hope that answered your question. Let me go back to our first question, which was from Celia, I think it was. Let me go back. Here we go. It's hello teacher. Can you, if you have time today, can you briefly go over bias and how you identify a bias, please? Thank you. Yeah, so bias, if you go through the investment syllabus, it does actually speak about bias and how to identify bias. But, you know, the difference between bias and trend is, I think we looked at one of the stocks earlier that kind of spoke a bit more about it. I can't remember. Let me see if I can find an example here. The difference between a bias and the trend. Was it this chart? No, it wasn't this chart. We go to the UK 100. No. We go to the SPX. This is not a great example, but I might try and be able. So the bias and the difference between the trend is, I mean, this isn't a great. There are cleaner examples than this, right? But you could say that the trend of this stock. All right, let's go. This is what we're gonna do. We're gonna do this. We're gonna do our get in our DeLorean at Marty McFly and go back in time. All right, let's go back to here. So we're gonna go back to the 18th of January, right? We reverse time back to the 18th of January. If we look at this chart here, right? If you look here, or maybe not go that. Let me go forward a little bit, a few days. All right, there we go. So if we look at this chart, what is the trend in this chart? Is the trend of this chart a bullish chart or a bearish chart? And we see what the chat says. If we look at the overall of this chart, is the trend of this chart trending bearishly or bullishly? Let's see what the chat. So Red Star says this chart is bullish. See if anybody else has got an idea. Do people think that the overall trend of this chart is bearish or bullish? Tyrell Rutledge says very bullish. Let me show you guys. So we got Red Star says bullish. Tyrell says very bullish. Anybody else wanna give a guess? You know, we're all learning here. There's no wrong answers. Everybody roll up, have a guess. All right, so you guys are correct, right? This chart is very bullish, as Tyrell has said, right? We can see the beginning of here, it started at, you know, the 2610 level, or 792 areas level. Lem Hendricks also says bullish. All right. And we can see that. So this chart is very bullish. And we can always tell if a chart is bullish or bearish. Like if we go to the left-hand bottom corner and it's lower than the right-hand top corner, we could tell that this chart is bullish, right? So the trend of this chart is very bullish. But if we zoom into, you know, this most current time frame and we look at our moving averages or our moving average indicator, remember, the moving averages are exactly what it says on the tin. It's a moving or a rolling value of the average of the stock, right? So the 20 simple moving average is showing you the average price. This point here, the last point plotted, is the average of the last 20 bars or last 20 candlesticks, right? So because we're on the daily time frame, this point here is the average of the last 20. So if you want to count back the last 21, 2, 3, 4, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20. So this is the 20th bar here. And in here. So this point here is the average of all 20 of these bars or this candlestick here. And you can kind of see that, right? You can see that we spent a lot of time high up in these 20 bars here, up at the top, but we also had quite a dip. So this is somewhere roughly around the middle. It's kind of weighted more at the top because I think more of the bars are at the top. So it's telling you where the average is, right? So this is what the moving averages tell you. So it's the 20 moving average is the 20 bars. 50 simple moving average is the 50 bars, which would be back, if that's 20, 50 would be back here somewhere. And the 200 simple moving average is probably off the screen, right? So this is telling you where the average is. So just because the overall trend of the chart is bullish, we can see that the overall, the trend has been trending upwards, is very bullish. The current bias of the price, which is where we're currently at the moment, it's actually bearish. It's bearish because we can see that price is trading below its average value. It's trading below its average value for 20 days. Remember, this is the daily chart, so this represents 20 days. It's trading below the 50 simple moving average, so it's trading below its average value for 50 days, and it's also trading below the 200 simple moving average, which is trading below its average for 200 days. So although we're seeing that the market is a bullish market, the bias for current price is actually bearish. So this is an indication that although we've seen price, trading well for the past, however many months, current bias of price is acting like it wants to go downwards. It acting like it wants to go bearish. And as we saw, as I said, this was an early indication. If we play forward with time, we can see that price did continue indeed to go bearish, right? We never, as we know with this chart, we know that price never actually recovered back to that point that we had, which is our all-time high here. So, this was an early indication. That's what we call these things indicators, right? These are giving an early indication that price actually might go down, right? It might actually, go in an opposite direction. And these are things, this is why we use technical analysis, right? We're using the charts themselves as indicators to tell us what price is doing, what the markets are doing, what the charts are doing, right? And this allows us to avoid news, noise, and confusion, right? Some people would have said at the point, if we go back, some people would have said, at maybe this point, oh, well, the market is very bullish, you could still invest in the market. Look, it's still going up. It's been going up since, let's go and see how far this market has been going up. This market has been going up since, March 20, since the Rona days. The market has continued to go up. Yeah, this is a great opportunity to invest right here, right? But if you don't understand how to read the charts and understand how to read indicators, understand the markets, and if you hadn't have used this indicator, you wouldn't have understood that price is actually trading below its average values, right? And these are significant values. As I said before, the 50 simple moving average and the 20 simple moving average are historically some of the best indicators of price going back in history, right? Before we had, computer screens, they used to have to draw these charts, these indicators on by hand, right? So if you're going to draw something on by hand and you want to take the time to do that, measure each bar and work out the average, then it must be a significant indicator for us to have on the charts, right? So it was a very significant indicator, and we can see why. Once it broke the 200 simple moving average, we can see that time told us that in the future that price was actually very bearish, and this chart continued in a bearish fashion, right? So although trends may be bullish, um, bias can be bearish. So ideally, we like to see alignment. We like to see an alignment between the trend being very bullish and the bias being very bullish. And this is in a bull market. Obviously, in the opposite direction, if we're in a bear market and we're trading a bearish strategy, we like to see the trend being bearish while the bias being bearish as well. All right. So does that answer your question, Celia? Just give me an indication in the chat if that is clear. And then we'll move on to the next question. Let me scroll back through chat and just make sure I go through. What's the next question? I know Vino wanted me to look at some penny stocks. Let me answer some of the questions. Let me see. And then we can come back to this. So yes, I think this is kind of an additional question you asked, Celia. Are they used as a guide to determine the health of the markets? Yes, they are used as a guide to determine whether the market is trading above average or below average. Let me go see a Red Stars question. Is a future like an option or something you actually hold? I've seen advertisements for all futures. Yeah, so futures and options are essentially the same thing, right? So what a future and an option is well, a future is exactly what it says on the tin, right? It's like, so let me see what option to explain what options are. So options give you the option to buy a stock at a certain price in the future, right? So it's like saying, so say for instance, a stock was worth $100, right? You can buy a future if you believe that, let me see what's the best way. So if you believe that price is going to go up, you might buy a future that says you can buy this. So say for instance, you have $100 stock, right? And you believe that that stock is going to go up in the future to $150, right? You can buy an option for that future for $100 today, and that option might say in 6 months you can buy this stock for $100, right? So in 6 months, once that stock is now worth $150, you have the option today to buy it as $100, right? So you've bought $150 stock for $100, right? So you basically essentially made $50 from that transaction. But equally, the person who's giving you that option, you know, the stock might go down to $50. And once that time comes up, in the 6 months, you would have to buy that $50 stock for $100, right? So options are kind of like you're hedging your bet against what the price would be in the future, right? So that's essentially what an option is. So futures is the same thing. When you're saying futures, you're basically it's a speculation for the future price of an asset, right? And futures and options are how they basically create synthetic stocks as well. You can set up in a way in which you can make it mimic or imitate actual stocks in the current time, so that as the stocks rise and fall, these synthetic stocks can mimic the price of current value stocks simply by hedging future prices on a stock by creating it synthetically, if that makes sense. I know that it's kind of hard to understand, but essentially you're hedging your bet of the future price, and that correlates with the current price of the stock. So that's how they create synthetic stocks. All right. So I hope that answered your question. The next question is, by Celia, is the 200 moving average being used as resistance as well? So yes, what you find is the 200 simple moving average is a strong, the moving averages work as strong levels of support and resistance, right? The reason why they do that is kind of like a self-fulfilling prophecy, right? All of these charts are based off of human nature because it's humans that determine the value of each one of these stocks, right? So it's a it's almost like a psychological thing, right? So when humans see price going towards the 200 simple moving average, they will psychologically visualize it as a level of support, right? So because people visualize it as a level of support, what happens is people start reacting differently because price is heading towards a 200 simple moving average. So this is why we use the moving averages, because the moving averages themselves become a psychological factor with humans, and humans start reacting to these visual indicators, which then reflects on the charts, right? So you'll find some stocks that um, behave very well to the moving averages. So if you look here, let's take a look, for example, in this part of the chart, right? Let's zoom in. Let me refresh the chart. If we zoom well, the 50 simple moving average has acted against price. We can see that it in itself has acted as a level of support, right? We can see where price has basically bounced off the 50 simple moving average here. We can see where price has bounced off the 50 simple moving average here. And remember, these support and resistance levels are zones. They're not precise exact levels. They're kind of areas, right? So we can see it bounced off here. 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 And we can see it bounced off here. So we can see how these indicators, this again, it's another reason why we use the moving averages. The moving averages are a great indicator of support and resistance levels. So we can see that the 50 simple moving average in this chart has acted as a great level of support for price, and price doesn't generally like to fall below the 50 simple moving average. Even when it does fall, excuse me, even when it does fall below the 50 simple moving average, it quickly recovers itself above it. So again, this is an important thing here. If you'd have been following the 50 simple moving average here when it actually fell through, it was an early indicator, even before we fell below the 200 simple moving average, that the chart was about to turn bearish. And it was an indicator for you to tighten your stop losses, or go to a more conservative strategy, because it was possible that the markets were about to turn around and flip, right? So again, these things become self-fulfilling prophecies because humans react when they see price moving to the 50 simple moving average, right? Humans will say, okay, price is getting to its average over 50 days, so it's time to start buying again, because it's if they believe that of its 50 simple moving average, then when price starts getting towards the 50 simple moving average, the market then believes it's time to buy because the stock is undervalued when it gets close to its 50 simple moving average, right? So these things become self-fulfilling prophecies and become support and resistance levels in themselves. And bear in mind, each stock or each chart has a different nature, right? So you'll find some charts don't respond to the 50 simple moving average. Some of them respond to the 20 simple moving average. You'll find that some don't respond to the 20 simple moving average. Some respond to the 200 simple moving average. So each chart is different depending on its own specific nature. And you can utilize each one of these moving averages differently based on the chart as a level of support and resistance. So, depending on the charts, a break and close below either one of these moving average could be a good indicator that price is actually about to turn around and maybe go on a bearish run, or if it's in the other direction, to go in a bullish run. All right, so I hope that answers your question. Let me see the next question. Let me go through. Hopefully that answered your question, Celia. I see you've asked that question a few times. So Red Star says, so would you buy the dip or stay out? My question about futures. Um, well, when you're talking about futures, futures are just a form of instrument, right? A future in itself doesn't really tell you anything about a chart, right? So it's not like all futures are good or all futures are bad. Same as all futures, so all options aren't good or all options aren't bad. The same like stocks. All stocks aren't good, all stocks aren't bad, right? You'd have to be specific as to which particular futures. All futures are is another way to make money in the stock market, right? So it's the financial markets are very clever at finding different ways to do the same thing, right? So, you know, buying an option of so in my previous example where I said, you know, you're buying an option today of $100 stock, expecting it to go to $150, and then you're going to collect in 6 months. It's no different from actually buying the stock and then making your money over 6 months. It's the same thing. It's just a different instrument or a different vehicle to get there. So look at it like this. If you're driving a car or riding a bike or in a van, these are all different vehicles to get to the same destination, right? So in futures is just a different instrument to options as it is to stocks or whatever kind of other financial instrument you could kind of conjure up, right? So don't get confused by the name futures and say, should you buy futures? The question would be, what futures are you buying, right? These are it's just an instrument or a vehicle in order to make money in the market. So there's no wrong answer. There's no don't buy futures or don't buy options or don't buy stocks. Each different instrument has different various benefits depending on whatever territory you're in, right? So to go back to what we were speaking about synthetic stocks and why people create synthetic stocks with options and things like this that mimic normal stocks, there are various reasons why you might not be able to get a regular stock, right? It might not be available in your territory. It might be out of market hours. There might be a ton of reasons. There might just be, in your territory, it's more beneficial for you to go for a certain instrument than it's to go for other instruments, right? So you might want to buy an option or a future rather than the actual stock because of in your territory, there are more benefits to you utilizing those instruments, right? So for me, I live in the UK. So for me in the UK, if I trade spread betting as a second income is tax free, right? This is not tax advice or financial advice, right? So, but in the UK, spread betting is a more beneficial instrument to me to trade the markets with, right? So it's still the same markets, it's still the same, stocks. It's just the instrument that I'm utilizing to trade the markets for me would be spread betting simply because it's tax free for me on my end, right? So could be the same stock. You could take that same stock and use a CFD, a contract for difference. That's another sort of instrument or another sort of vehicle within the markets that allows you to trade the markets. But for you, it would be whichever one is most beneficial for you, namely in your territory. It might just be your broker, right? The broker that you're trading with might offer you good rates on futures, right? It might offer you good rates on options. It might offer you good rates on some type of other type of instrument or some other type of vehicle, right? So when you say, so would you buy the dip or stay out? My question about futures, buying the dip or stay out is more determinant on the market rather than the vehicle that you utilize to trade with, right? So don't get confused with the instrument versus the market. Okay, I hope that answers your question. So let me go to the next question. Salute Isa Novoso. Good to see you, brother. So let me go back to Vino. Vino said you had some penny stocks that you wanted me to analyze. if you wanted to put what stock that was in the chart, we can kind of run through it and give an analysis of that stock. If you put that in the chat, and also let me know what the ticker symbol of the particular stock is, and we can do an analysis of it live and see whether or not it's a good investment for you to go into. Jaguar Health INC. What is the ticker symbol for Jaguar Health INC? Do you know the ticker symbol for it? Let me see. Jaguar Health INC. I think it's this one, right? Is this the correct? Assuming that this is the correct. This is the correct stock. 005. Yeah, that's it. 0 point. Yeah, that's correct. All right. So let's take an overall analysis of this stock. So let me ask the chat, what is your first impressions? How would you guys describe the overall look of this chart? What are your first impressions? So the first thing, the first test, or the first, litmus test would be the first visual thing. What does the first visual thing tell you about this chart? What is the first visual about this chart that you notice? We're gonna learn together. Let me see what the chat is saying. When with your first impression looking at this chart, what is the first thing that comes to mind? So ISO Novoso said it's going down. Anybody else want to take a guess or a stab of what their Lem Hendricks says it's lost value? Anybody else want to take a guess or a stab? At what their first impressions of this chart is? Anybody else want to take a guess? All right. So as ISO said and Lem said, yes, it's going down. Remember the first thing we said about the last chart that we looked at. If price is lower in the bottom left corner and higher in the top right corner, this tells you that this would be a bullish stock, right? However, we like to see charts doing this sort of direction or going at this sort of angle. And again, the sharper the angle, the more bullish it is, right? The flatter the angle, the less bullish it is. With the exception that, if it's too sharp, it could be a spike. So be careful of like a spike or a pump and dump, right? So it's what be careful of. So we can see clearly with this chart that this is a bearish chart, right? So if I was to look to do any kind of investments in this, the overall trend of this is very bearish, right? So if we go closer to more, look how close we have to go in time. And even if we look at the most recent months, if we look at our most recent high of this, it's at $13 has been its most recent high of a more recent time. We can see that since then, again, price is once again bearish with this chart, and it's trading at 50 cents for this chart. So everything about this is saying it's quite bearish. If we look at our indicators and look at the high of last year, the high of last year is trading here. If we look at our indicator, the highest point of last year, price traded at around $13.42. The low of last year is here, around $1. And we can see price currently trading. So is price currently trading above the high of last year, within last year's range, or below the low of last year? Let me see what chat is saying. Is price currently trading above the high of last year, within last year's range, or below the low of last year? Let me see what chat is saying. Are we above the highs, in between the range, or below the low of last year? We're going to analyze this together, yeah? I give you a few minutes. If $13 is the high of last year and $1 is the low of last year, is price trading above the high of last year, within the range of last year, or below the low of last year? Maybe you guys don't know. So currently we're trading below the low of last year, right? Because current price is 50 cents. However, the low of last year was $1. So we can see that this stock is actually trading below the low of last year, right? So again, on top of the fact that, the overall trend of this stock is bearish, we can see that the most current trend of it is bearish with this bearish slope. And we can see that price is trading below the low of last year. So what that also means is that price is trading below. If we look at our key support and resistance levels, we can see this. You can just see it at the bottom of the screen. I don't want to, it's highlighting. I don't want to bring up the indicator, but if we look at this dot here, these red dots here indicate as key support level in this chart, and this is representing this level here. We can actually see that we're trading slightly below our support level. If we zoom in a bit closer, we can see that the support level would be here, and we can see that price is trading just slightly below our support level. So not only are we having is it bearish in trend, the most recent trend is bearish, and we're trading below the low of last year, and we're trading below our key support level. So everything about this is saying bearish so far. All right, let's go into our weekly time frame to get a closer look. If we go into our weekly time frame, we can see that our current trend filter is red. If we look at our moving averages, we can see that price is actually trading below the 50 simple moving average. We can also see, key pivot support and resistance level here. We can see a key pivot support and resistance level here, another one here, one here, one here, and one here. And we can see that we're trading basically below all of them. We're actually trading slightly above our lowest support level, which would be here, represented by these three dots here. Draw a line here. So we're trading slightly below our support level of 35 cents because we're currently trading at 50 cents. So we're trading slightly above our support level in this chart. If we go to our daily time frame, if we bring up this daily time frame, there we go, and take a closer look at price. Let's refresh the chart. If we look at this chart here, we look at our moving averages. We see our 200 simple moving average here. We see our 50 simple moving average here, and our 20 simple moving average. If we zoom in a bit closer, it might give you a bit better look. What do you notice about price and the moving averages here? Well, what you notice is that we're, all the 200, which is the slowest one at the top, we're just outside of complete bearish alignment. because we have our 20 simple moving average trading above our 50 simple moving average, right? We've seen it's been trading in our bearish alignment with price below our 20 simple moving average, 20 simple moving average above our 50 simple moving average, and our 50 simple moving average above our 200 simple moving average. But we can see, due to this recent growth in price from the 15th of March 2022, we can see that actually we had slightly a bit of bullish movement here. And we can even see that the trend filter turned briefly from red to green over these few days since the 29th of March, right? So we saw a bit of bullish movement. So again, remember, this 20 simple moving average always reflects the most recent time frame, right? It always reflects, the most recent movement. So this is why we're seeing a bit of growth and the crossing of the 20 simple moving average above the 50 simple moving average. But you can tell that there's still the overall or overwhelming trend of this chart is still very bearish, because look at the gap between price, the 50 simple moving average, 20 simple moving average, below the 200 simple moving average. This big gap is indicating to you that, price is trading well below its, average price level, right? So we can see that it's a bearish bias according to our moving averages. And only that, if we go and look at our key support and resistance levels, we can see a big one here in red, which is we're trading below. We can see a resistance level shown here with this green dotted line. We're also trading above, below that. We also see another quite long resistance level trading, and we're trading below that as well. So we're trading basically below all of our support and resistance levels, except for, this very last support level, because we had a bit of growth over the past few days. So, our current trend filter is actually red as well. So, to go over everything, if we looked at our monthly time frame, we saw the overall trend was bearish. We saw our most recent time frame was bearish. We also saw we're trading below the last year's most high and most lowest levels. So we're trading below that. We're also trading below our support levels on a monthly. On the weekly time frame, we were trading below our 50 simple moving average. We're trading below our 200 simple moving average. We're also trading below our support levels, with our trend filter being red. We had a correlating trend filter on our weekly time frame, which is also red. So we had the two correlations between the two time frames. We also was trading below our 50 simple moving average, trading below our 20 simple moving average, and trading below our 200 simple moving average. And we're also trading below all of our support and resistance levels, bar our last one, which is here at the bottom one at around 34 cents. If you go to our daily time frame, our final daily time frame, to look to see if we have any, breakout indicators, we did have a breakout indicator that was represented by the, most recent bullish price movement. But the overall overwhelming indication of this chart is very bearish, right? So you wouldn't be looking for a bullish indicator or bullish entry signal in a very bearish chart like that, right? You'd more be looking for, bearish entry signals. And we can see that we've got numerous bearish entry signals here. We see we had one on the 4th of March. We have another one here on the 17th of February. We have another bearish indicator on the 11th of February. We have one more on the 21st of January. We have another one on the 19th of January. Another one here on the 10th of January. Another one here on the 5th of January. We have another one here on the 28th of January. So everything about this chart is telling you that it's a bearish chart with multiple bearish indicators. So if you were looking to enter into this chart, the enter or the opportunity in this chart would possibly be a bearish play, right? It would be a bearish play on the charts, because everything about it is telling you bearish trend, bearish bias, bearish movement, bearish alignment. Everything is bearish, right? So if there was an opportunity at play here, you'd be looking at, if I zoom in a bit closer, if you were looking at a bearish play, it would be to ride the small gap from its low here or at 36 cents, and our current, price is at 50 cents. So our current price is 50 cents. So any opportunity at play would possibly be riding this chart down to its all-time, well, is it its all-time low of its most recent low of 36 cents, right? We see price again, bearish trend, bearish bias. We see a bit of a pullback. So again, this would kind of be like a pullback strategy, price pulling back, and then we're seeing price, uh recovering from the pullback or correcting from the pullback, right? So the opportunity, if this is something that you would want to look to invest in, if it was me, if this was something that I would look to invest in, I would look to be riding price down from its current entry level down back to its low, and possibly expect it to break this low and continue down to the downside. I don't know what its all-time low is. I wonder if it's ever gone lower than its that most recent low. It doesn't look like it. So yeah, we are at our all-time low. If I zoom out of the chart a bit more, yeah, price is at its all-time lows. Oh, it was at its all-time lows here on the 2nd of March time. So I think that is, if this is something you wanted to get into, if it was me, I would go for a bearish play, riding price 36 cents. That is where I would say the opportunity is here on this chart. You know, I there are plenty more charts that offer better opportunities than this to get into. But if that is what you wanted to do, then that would be the opportunity. Ideally, you'd have liked to have caught it at the height of the pullback, right? Ideally, you would have liked to have caught it from the 4th of April. This is where they hit the height of the pullback. So if you could have got in somewhere around here and then rode the pullback all the way back down to current price, that would have been the ideal price movement. But if we look at the ratio between where the high of the pullback was and where price currently is, you're kind of looking at, you've kind of missed 2/3 of the movement. So there's still a third of the movement moving down. Still a third of the movement here with the opportunity to go through, but you've missed about 2/3 of this movement. All right, Vino. So I hope that's give you a good analysis of the chart. I hope that's answered your question. Just give me an indication in the chat if that's good for you, or if you have any other questions on that. Red Star says, SNDL, are people investing in marijuana stocks in the UK? Let me take a look at SNDL. Let me zoom out of this. So over here, SNDL, I'm not seeing, wait, Sundial Growers. All right. So over here in the UK, we're not going through the mass legalization that you guys are going through in America. I know California's legalized weed. I know, there are various celebrities getting into the weed markets and things like that. But over here in the UK, the legalization thing isn't, it's not happening over here. So it's not something that we really have awareness of over here. It's not something that is something on our radars for over here. So in terms of us, as a society, getting involved into the weed area, that's not something that we're doing on a mass scale over here, right? But it doesn't mean to say that we can't, invest in the stock if the stock is not good. All right, so let's take a look at an analysis of the stock. Remember, guys, if you haven't already done so, please hit the like button, hit that subscribe button as well. Help to boost the stream. If you want to support the stream, you can, support the Cash App. It's British pound sign at Focus on Investing. Or you can hit the PayPal, which is paypal.me / focus on investing. The URLs and links are scrolling across the bottom of the screen if you'd like to support the stream. Yeah, and remember, if you want to get access to these custom coded tools and indicators that allow you to analyze your own charts. Also, we've got a whole investment syllabus that goes through, each step of understanding how to do technical analysis, how to look at charts, how to understand charts. We've got that at focusoninvesting.io. We also give you stock lists. So trending stocks, every week we'll give you a list of all of the trending stocks for you to kind of look over and go through. And we also have our premium stock list, which is basically, we give you the stocks and the exact price that you should enter into these stocks. These are stocks that are, trending well and are currently making money at this time. So, these are the stocks that, we highly recommend that you invest into and to get a good return. These are ones that have already been pre-analyzed by us. We've done all that hard work of the analysis for you. So all you've got to do is basically put your money into it and reap the rewards. Okay. So that's at focusoninvesting.io, where you can get access to all of our stock lists, the lessons, and all of our custom coded indicators as well. So check that out. All right. So let me get into this. I see your question, ISO. Let me analyze this first, and then I'll get back to your question. So we're looking at Sundial Growers Inc. So it's a similar story. If we were to look at the overall shape of this, just off of this chart, what would people say the overall look of this chart is? What's your first initial thoughts? We've got to train ourselves to get used to being able to identify charts, from eyes. We're training ourselves with the skills of being able to analyze charts, instantly. You want the skill set as you can look straight at a chart and be able to analyze it. Obviously, the indicators help you to do this because they give you, definite areas or markers for you to analyze a chart or compare it against. It gives you an area of comparison or area of reference. But we want to get into the habit of being able to look at charts and understand how to read them, or at least get an idea or an impression of what the stock is actually doing just by initial sight. So, chat, what do you think about this chart? What is the overall thing telling you about this chart? What is the overall sentiment? What are your first thoughts of this chart? So red says bearish, but buy the dip because when legislation comes in, it will go up. Okay. Anybody else got any opinions on this chart? What is our overall opinion of the chart? So I'll give you guys a few more seconds to answer if anybody wants to give their opinion on this chart. And see what people are, what people's opinions on weed stocks are. So Celia says price went down and then consolidating. I see a long term. I see a long wick green candle. Okay. So let's take a look at this. The first thing that we always notice, remember I always said, if price is lower in the bottom left corner and high in the bottom right corner, that means it's a bearish stock, right? Sorry, a bullish stock. We can draw our line and we can see that the price pattern does not match this arrow, right, or this direction of arrow. It's actually the opposite again, and we're seeing price going downwards, which is a very bearish action or very bearish movement, right? So we saw it got its ICO on the August 2019, right? And this is another thing, generally in stocks, we like to see a good amount of history, right? Because we know in stocks, how it's acted in the past is how it's likely to act in the future, right? So if we've seen a stock that's gone on a great run in the past, then in the future, it's likely to go on a great run again, right? If we've seen in the past that the stock is very has a lot of volatility, it whips back and forth, like Willow Smith, we know that it's going to most likely do the same thing again in the future, right? So, if it has deep pullbacks in the past, then it's likely to have deep pullbacks again in the future, right? So we like to see a good few years of history so that we can understand what the stock is doing. The other thing is as well, whenever, you know, companies go to market, they do their IPO or their initial public offering, you always tend to find quite a bit of volatility in the market, right? And you can see here, the moment that this stock entered in the market, we saw it tanked and went straight down. Generally, why this happens, you find this a lot as well with a lot of these cryptocurrency coins is, when these companies are forming, people involved in the creation of these companies tend to get, as some sort of payoff, they get some kind of stock. They get gifted a few stocks. So say for instance you're a startup company. One of the things that startup companies do, if they can't afford to pay their employees or their staff, what they might do is they might give these employees a bunch of stock. They say, here, you're at the beginning of this company, here, take some stock. I think that was the case with, was it Microsoft or Amazon, or a lot of these companies, get gifted stock, as being part of the company in the beginning. What a lot of these employees do, the moment it gets issued into the stock market, they cash in their stock to get their payment out, right? So obviously some of the employees believe in this company. They believe this thing is going to go, great for the future. It's going to grow in the future. We want to hold on to our stocks and it's going to be worth X amount in the future, right? Other people, as soon as this goes into an IC, oh yeah, Apple, Red Star says Apple. Maybe that's the one I was thinking of. Yeah, as soon as these companies get issued to the markets, you'll find that a lot of people cash in their stock in order to get payment. They might have been working for how many months, haven't received any decent payment. So now is their time that they can cash in and get decent payment. So oftentimes you see an initial tanking of the stock. So the beginning of the markets is never really a good indication of what the market is doing or a good understanding of how to read it. But not only that, it takes a few months for the market to settle down. So generally something like this has not long enough history for me personally and with our strategy for us to invest in, right? We'd like to ideally to see a bit longer history so that the stock has a chance to stabilize and has a chance to give itself an established history for us to understand what the nature of this stock is, right? So we saw the initial tank from it. We saw it go down to its all-time low level, which is here around, what is that, 10 cents. We saw a bit of a boost, a bit of a grow, a bit of a spike here. We came all the way up to about $3.99, $4. And then after that spike, we saw price go down, and then we've seen it come to its kind of final resting place, which is about 52 cents, right? So price is, currently trade. If we look at where our, so we see our higher price here, our low is actually trading just slightly above the low of last year. So if you see here, I've zoomed in a bit more. Our low of last year is here, 47 cents or so. And then current price is about 52 cents. We're actually trading just slightly above the low of last year as well. So we're trading in between our highs and lows of last year. So, you know, that generally indicates a sort of consolidation for the charts, right? It's not trading particularly bullish. It's not particularly trading bearish. It's kind of more middling in the side in a kind of a sideways fashion. Ideally, we'd like it to have a distinct bias or trend, and we like to see alignment with it, right? So again, a very overall bearish trend, but trading in between the high and lows of last year. We actually can see that, we're trading above our support level indicated by these red dotted line, which is showing you obviously correlating the support level or the low all-time low of this chart. Let me bring it up a bit so it's a bit easier for you guys to see. So you can see this support level here. Make it a bit easier for you guys to see. This dotted line here, if I highlight with a red line, is showing you the actual support level of this chart. So again, it correlates with our all-time lows. So we're not quite at our all-time lows, but we're actually seeing, bearish trend on it. If we go to our weekly time frame, let's reset our chart. Similar story. Let's zoom in a bit closer. Again, current trend filter is actually red, so this is indicating a bearish trend filter. We can actually see that price is trading, below the majority of our, pivot support and resistance levels. We can see a pivot level here, a resistance level here, resistance level here. We can see a support level here. It's very quite messy, this chart, because there's quite a lot of pullbacks, dips down, dips back up again. We're actually currently trading below our 50 simple moving average for this. So again, this is another bearish signal. So if we zoom out to get a clearer view, we can see quite a few bearish signals. Again, on the closer inspection, we can see there are a few support levels that we're trading above. But again, there's a few resistance levels that we're trading below as well. So again, another middling indication for this chart, right? It's not quite at the bottom of everything. It's not quite at the top of everything. Although its indication is that it's very bearish, we can see that price is trading, in between our highs and our lows here. If we go forward onto our, let's reset our chart. Similar story again. We can see a red trend filter. A red trend filter again indicates bearish price action. This also correlates with our monthly trend trend filter, which is also red. So these are both correlating as a bearish trend filter, right? So again, more indication of bearish action on this, right? And then we can see that price is also trading below our moving averages. We're seeing the 200 simple moving average trading above the 20 simple moving average, the 20 simple moving average trading above the 50 simple moving average, and all three of them trading above price. So again, a very bearish signal. Again, we're not seeing a complete bearish alignment, right? Because we're seeing the 20 simple moving average trading above the 50 simple moving average, right? If we'd have seen the 20 simple moving average trading below the 50 simple moving average and price trading below that, it would have been a complete bearish alignment. But we're not seeing that. And the reason we're not seeing that is because, as I said, this is a chart that's showing you it's not really settled. As we spoke in the beginning, it's not very settled. It's got quite a volatile trend or pattern to it. We can see that it was quite low, then it whipped up high here. It went low again and it whipped up higher here. So these whips back and forth is what is causing this 20 simple moving average to whip above the 50 simple moving average, right? So again, this is telling you that it's not really settled. It's not really a stable stock. It's something that is being influenced even here again, we see another massive spike here. Look at this one here on the 15th, 12th of November. So it's like it wants to go down, but it's being affected by something. I don't know if it's maybe some kind of news or some kind of, fundamentals that are causing this stock to whip up. But these could be, pump and dumps. It could be somebody, I don't know what the situation is, but it's, even if you look here, there's a gap. There's a big gap in price here where it's gapped up very highly and then fell straight down again. So it could be something artificially propping up this stock, and as it pops up, people dump it quickly. It goes forward again, it pops up and it dumps it very quickly. So I don't know too much about this stock, but I don't know if there's a lot of maybe media attention around it, maybe a lot of hype that's around it, because generally when you see these spikes, they're usually fundamentals that pop up when you see things like this, and then it dumps out really quickly. So you've got to be careful. Again, this is why we do technical analysis and not fundamental analysis, because fundamental analysis is based on news, noise, and opinions, right? So you could be getting baited into, one of these spikes before it dumps on you, right? You don't want to hear the spike, get in position for buying, and then it dumps on you. So, be careful with a lot of these charts, all right? So again, the overall chart of this is very bearish, but it's not completely bearish because we're seeing these spikes, we're seeing these pumps, and we're seeing it trading above support levels. So you can kind of see that it's not a completely settled or a stabilized stock. If we go to our final time frame and look to see if there's any entry indicators, let's reset the chart. We can see that we had a strong entry indicator here for a bullish signal on the 24th of March. We saw another strong entry indicator here on the 11th of February. We saw a bearish signal here on the 19th of January. So another bearish signal here on the 30th of November, then quite a bullish signal here. So again, this is kind of giving you an overall story of this chart, right? It's bearish, bullish, bearish, bullish, bearish, bullish. It's not really, doesn't really have an overall trend and a bias. Ideally, if you want to get involved in a stock, you'd ideally want it to all be alignment, right? You want all the signals to be bearish, meaning like it's trading below it's at the bottom, like all-time lows is trading at, it's trading below, last year's low level, it's trading below its 50 simple moving average, is trading below its 200 simple moving average, is trading below its 20 simple moving average, is trading below all pivot levels. We're getting bearish entry indicators. That is something you would want for a bearish entry into a bearish stock, right? Conversely, if you wanted to go into a bullish stock, you'd ideally want to see it trading at all-time highs. You want to see it trading above last year's high level. You want to see it trading above the 50 simple moving average, trading above the 20 simple moving average, trading above the 200 simple moving average. You'd want to see it trading above all resistance levels, and you'd ideally want to see a multitude of bullish entry signals into the chart. With this, you can see it's a lot of mixed signals between bearish and bullish, bearish and bullish, bearish and bullish, right? So, but whenever you see mixed signals between bearish and bullish, it's almost like the bears and the bulls are fighting. It's a bull and a bear fight, right? You see, the 1 minute the bears are winning, the next minute the bulls are winning, then the bears are winning, right? So there's no real direction with this chart, right? In terms of what direction it's going to go in. So again, it's like a gamble because it's no alignment. You're not following a trend. There's no trend to follow, right? So you said it's a more of a squeeze play. I'm not sure what you mean by, can I show it on a blank screen? I'm not sure what you mean by blank screen. Just let me know what you mean by blank screen. But yeah, ideally you would like to see alignment, and be careful with words of squeeze plays, right? When you're talking about a squeeze, a squeeze is based on prices going up, right? If you're looking for squeezes, the idea is the squeeze is created by the price is increasing, so people can't afford to exit their position, right? But you can see here that price is not increasing. Price is actually decreasing. So it's not becoming harder to exit your position. It's actually becoming easier to exit your position, right? So yeah, so it's becoming easier to exit your position. So, this is why we like fundamental analysis. So this is why we like technical analysis rather than fundamental analysis, because with fundamental analysis, you get a lot of news, noise, and opinions. People say, "Oh, well, my auntie's friend's dog said that this is going to be the next play," right? And it's possible that it could be the next play, but the issue is that it might not be, right? Everything you're talking about speculation here. Nobody knows what the markets are really likely to do. And it's true that yes, we stocks might grow in the future, but there's no saying that it will grow, number one. And number two, there's no guarantee that Sundial Growers Inc. will be the company that grows. Right. Remember, we had the .com era and the .com boost, and everybody was going out buying out .com domain names. Did all of them succeed? No, it didn't. Right. So, it doesn't mean that just because you've got a .com name that that company is going to grow, right? So be careful with the narratives of it's a weed stock and weed is about to blow up. Weed as an industry might blow up, but it doesn't mean that each individual weed company might blow up, right? So yes, they might all blow up, but Sundial Growers Inc. in itself, there's no guarantee that this will blow up, right? And again, you're talking about opportunity costs. Why take the risk of going on something like this when there are charts that are growing now, that are bullish now, that are making money now, that you could be investing? Why get involved in something like this that may or may not blow and is currently losing money when there are other things that are growing money, right? So just be careful of, narratives. Again, this is why I stress technical analysis, because the charts tell you everything. You can tell by one look it was at a higher price, the price is going down, right? So the history or the trend of this is that it's going down. Yeah, there's no denying that. It's not my opinion. I'm not telling you to believe me. I'm not saying to you, believe me, it's going down. I've got a tip that it's going down. Trust me, it's going. I don't need to tell you that. You can look on the chart yourself. You can see where the price was on the 3rd of June, and you can see where the price is today. And you can see that the price has gone down, right? This is an observable fact, right? It's not a guess. It's not a speculation. It's not an opinion. It's an observable fact, right? So just be careful with, fundamental news, noise, and opinions where somebody thinks that something is happening, right? Why take the risk of a gamble of something when there are charts that are going up right now that you could be making money with right now, instead of sitting here waiting to make money when you could be making money? All right. I'm just looking at your chart saying black screen. I don't know. Were you saying that you couldn't see the chart? Can you show it on a black screen? Oh, what you mean, the color of the charts? Is that what you're talking about? On a night? What are you talking about? Are you talking about the night theme? You're not talking about this. Where are we? When you say on a black screen, is that what you meant? It's all the same. It's just a different color scheme, but you wanted it on a black screen. That's it, on a black screen, right? But yes, traders, we've come to the top of our background night. You want the Night Rider version, huh? Yeah, traders. So we've come to the top of our 2-hour mark. If you haven't already done so, please like the stream. Please hit the subscribe button. The usual sharing and all that. If you want to, make sure you catch the next week's stream. Again, we're here every week at 8 p.m. UK time. I think it's 3 p.m. Eastern. I think it's 12 Pacific time. You can catch us, every week. Any questions you have about stocks, anything you want to go into, any strategy plays, any analysis of any different charts, you can do that as well. Again, if you guys want to support the stream, you can support us by, donating to Cash App, British pound sign focus on investing. You can also support by going to paypal.me/focus on investing. And again, if you want to learn how to analyze these charts yourself, get the experience of technical analysis and also other trading principles, you can go to focusoninvesting.io. There we have a full investment syllabus that teaches you everything from how to utilize this platform, how to read the platform, also how to use indicators. And remember, a lot of these indicators are custom coded indicators by myself. If you want to get your hands on those indicators, you can do so at focusoninvesting.io. If you want to get weekly lists of trending stocks, you can get that at focusoninvesting.io. And you can also, if I put my request to put my Cash App in the chat. All right, I'll put it in the chat. You could also, get, if you want to know just directly what stocks you should be investing in, then we also have premium stocks that basically just tell you, and make sure I spelled this right, focus on investing. There we go. We also have, lists of premium stocks that tell you exactly what the stock is, exactly what price to enter in, or exactly what price to put your stop loss at. And, and there are other principles of how to, triple your money. Once you get a winning stock, you can also do that as well. So anything you need to know about stocks and investing, go to focusoninvesting.io. And, that's where you can, learn all of our jewels and our gems and become proficient investors yourself. My whole aim here is to teach you guys how to analyze stocks for yourself. It's not about, me saying what is good to invest in or me telling you that you should invest. At the end of the day, it's you guys hard-earned money. Whatever job you worked hard at, how many hours at the job to earn your money, when you're investing your own money, your money should not be invested based on what I say. Who am I, right? Your money should not be invested in what I say. DL correct. I'm not sure what you mean by that, Resta. Your money should not be invested in by what I say, right? My aim is for you to understand the charts yourself. So when you're putting in your money, you're putting it in based on, what your own belief is, what you understand of the charts, right? You can see observable facts so that when somebody comes to you and says to you, why did you invest in this chart? You can give them points. You can tell them it was trading at all-time highs. You could tell them that it was trading above average. You can give them specifics, not, oh, well, I feel, or I heard, or I'm guessing, or I think. None of these words should be involved when you're dealing with your money, right? Your money is very tangible. You've worked very tangible, hard-earned hours at the job to earn your money. You shouldn't give that away based on hunches, feelings, whims, news, noise, and opinions of those things. We should you should all be able to have a certain strategy, a solid watertight strategy that can tell you directly if you want to invest into something or if you don't, and you exactly understand exactly how your money is going to return to you, right? So if you want to have all of those things in terms of a strategy, you go to focusoninvesting.io. Again, if you want to support the stream, the Cash App is on the screen. And yeah, thank you guys for joining me. Again, as I said, same time next week. We'll be here every Sunday to go through any of your questions or anything you want to know about trading. All right, people. Well, thank you for joining me once again, and I'll see you next week. Take care. Peace.